Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 28th of November. Starting off with Avocet Mining, which is looking encouraging in the sense we've got this triangle breakout here, actually gapped through the top of that feature there around, what's that, sort of 5.5 pence, something like that. And while we're above that gap, looking for the stock to maybe retrace back towards 8 or 9 pence, something like that, maybe half the fall that we saw at the beginning of October. Obviously back below that line ends the bull scenario, the recovery scenario. Ideally an end of day close today above the 50-day moving average would inspire confidence. That's 6.26, so not too far away on that at the moment. Next stock is one that was looking at when it was here. It's gapped through and gapped outside the falling channel there, which is normally a very bullish sign. And we're also threatening to close above the 50-day moving average at around 31 pence as well today, which would be a good thing. Basically, the target here, as you can see, 200-day moving average, 39 pence, and then hopefully up towards the 45 pence plus post-August resistance area. Stop loss back below 25 pence should cover any potential mishaps there. Next up, nice to see the return of Hurricane Energy there, just breaking out of this falling wedge from July. I've seen quite a few charts like this now coming through just at the end of the year, as we approach the end of the year, so maybe that's a bit of a Christmas rally situation going on there. But here we have the shares retracing quite painfully down to 40p from 60p, and breaking the falling wedge there at 42, above 42, looking for maybe 52, which was the last resistance on the way down in October. Rising 200-day moving average as well should drag it provides positive momentum as well, should drag the shares up, and we had bullish divergence in the RSI window ahead of the latest break. OPG saw it a few days ago. Didn't think there was any reason to rush into featuring it here, but obviously there was. They've got effectively a island reversal here with the shares gapping down and gapping up in November. So that sideways shuffle, beautiful feature there, just below the 50-day moving average. Obviously end of day close above both the 50-day and 200-day moving averages yesterday. And the view at the moment is that while we remain above the 200-day line at 14.95, we could head back towards 2021, which was where the shares were in April. Any setback, I suppose at this stage, any setback towards the 200-day line intraday would be regarded as a buying opportunity if obviously you're not put off by the fact that the shares have effectively doubled in the last week. On to a stock which has pulled back quite sharply over the last couple of weeks, I suppose. But interesting here that Oilex is still holding this 50-day moving average at 0.26 on an end-of-day close basis, so intraday spikes below, but seems to have the support there. That was the old resistance in August and September between 0.25 and 0.30, so we're right in that zone. And the ideal scenario here is that the shares managed to find a base here above the 50-day line and at least retrace part of the pullback from 0.7 earlier this month. I suppose if you're cautious, you'd be waiting for 0.33, 0.35 to break before regarding this as a momentum play, and also wanting to see the RSI back above 50, neutral 50 versus 45 at the moment. One of the stocks of the week this week has been Powerhouse Energy, and interesting that we hit the top of that channel, the red channel, well, the red line there I've drawn as a mid-channel line at 0.67. That was the initial spike that we had at the beginning of the week. End of day close today above 0.67 could open the door towards a 0.9 target. You can see the 50-day and 200-day moving averages now both rising, the 200-day line rising. So this is potentially a golden cross. The other positive there is that the shares gapped up through resistance and haven't been able to fill that gap. Presumably, there may be an attempt on filling that gap, but while that remains unfilled, this can be classed as an ultra bullish situation. Finishing off with stock which I look at now and again, and here it's worth looking at Redx Pharma with the break of this falling wedge from late April. End of day close above the 50-day moving average today at 7.5 would be most welcome, and target as high as 13, 14 pence, which is where the stock was back in May. That's it from me. More updates tomorrow.